Welcome to today's session on what to do with your profits. This is a webinar for L&D Free Spirits, which is a community for freelancers, self-employed people and small businesses within L&D. I'm joined today by the fabulous Joakim Paurell from Worry-Free Wealth. Just a bit of a disclaimer before we get into everything. We are going to be talking financials on here. If you do want to make any decisions, any investment decisions with your finances, you need to make sure that you seek independent advice or do your own research as well. So this session is for a bit of guidance. Any questions, I will be sharing Joakim's information in the chat later on. Okay, Joakim, over to you. Thank you.
Thank you. Okay, so today we're going to talk about what to do with your profits and some minor points around that topic. So let's maybe start with just telling everyone who I am. So I used to be employed at a bank in Sweden as a financial advisor, and my biggest hobby in the world was trying to find good stocks to invest in. So I started investing, well, when I was 18. And when I turned 41, I was in the fortunate position to quit my job and do whatever I wanted to do for the rest of my life. So I became a business coach because everything that I've learned from investing and looking at businesses, I now try to implement with small businesses and help them grow. And I'm also a certified coach. So I do both business coaching and normal coaching. Okay, let's start. So we all know that as entrepreneurs, we are driven by our vision. We have a large goal that we want to achieve. We want to help 1 million people, or we want to start the biggest charity foundation in the world, or whatever we want to do. But the biggest job is to grow the company into that vision. That's your job as the founder. I'm going to mention a little bit about all the different hats we need to wear when we have a company. So as a founder, you think about your business in one way. As the CEO, you might have to look at it a different way. When it comes to paying taxes and looking at your finances, you might have to look at your business a different way. But the main job, of course, is to create the business of your dreams. So to grow the company, you must understand two very important things. The first one is you are not your company, and this is where the different hats come in. So sometimes you just have to take a step back and realize that we do not always do what we do because we love it ourselves and it's the most fun thing that we want to do. Sometimes we need to think about the company first, or at least as a separate thing. And this is extremely important. We need to kind of have a barrier or a wall between the company and ourselves. So you have to differentiate between business and personal, both in regards to money and when it comes to your position in the company. And this is, well, I can give you a very good example, and that's when it comes to money. If we do not differentiate between what is the money that belongs to the business and what is my personal money, things can go really, really poorly very quickly. So that makes sense to most people, and hopefully you understand that you need to have some form of system so that you don't dip into the company's war chest or the company's money. And when it comes to your position in the company, what I mean there is, if the primary objective is to grow the business into this dream that you have, then sometimes we need to look at ourselves and say, am I the best at marketing, or do I need someone to help me? Am I the best at managing the financials of the business, or do I need someone to help me? And so on. Eventually, when the company has grown a bit, maybe you need to hire a lot of people, and you hire, of course, people that are better than you at certain things that you need in the business. So we can't be everything, and we need to just have that in mind, even if we're small, that eventually you might need a professional for different positions in the company. If you confuse the business's money for your own, the business will fail. If you choose to wear every hat in your business, the business will fail. And a lot of business owners, when they start out, they do really well because it's driven by passion and 18-hour workdays. But sooner or later, you might realize that you're a great founder, but not a great CEO, or you're a great founder, but not great at the business financial side, or you need someone with marketing or whatever it might be. So keep in mind, we all need to wear different hats at different times, and we also need to wear different hats depending on for how long we've run the company and where the company is in its life cycle. Number two, the job of a CEO is to grow the productive assets. And the productive assets would be the sum of all assets in your company, sorry, and the ability to grow. So as an owner of your own company, there's really no difference between owning your own company or buying shares in Tesla or Volvo or whatever company you want to invest in. As the owner, hopefully, you will get a part of the profits. And if you're the owner, then you're above the CEO. So you decide at the annual board meeting who is going to be the CEO of your company. So the job is to grow the company, and that is super important. The job is not to have a good time just because it's fun to have a business. And sometimes we get stuck in the things we need to do from day to day, and we forget to think long term that the primary objective is to grow your business into your dream. Every company has an owner. What all owners want is for the company's CEO to be a good custodian of the money that has been invested. This means that the CEO's job is to make money for the owner. So if you're stuck, then maybe one of the hats that you need to fill with another person, or where you need some further education on a specific topic, might be the CEO role. So you might be an owner, the CEO, and the employee, but you are not the company. So I know it's hard to wrap your head around sometimes when you're putting so much time and effort into running your business, but it's really helpful to just have a break, think about all the different roles that your company will have in the future, and then look at your own skills and make sure that you have all of those skills, or at least have a plan to replace yourself in certain roles and get help outside or from outside. Hope that makes sense. So we'll try to play a little clip. It's just over a minute long. We'll see if you can hear it. If not, Kim will share a link so that you can listen to it properly.
Charlie made a very good point there about how managers could do better if they understood investments. I find it absolutely fascinating, and I've seen this throughout my life. I've seen it close up. I will have friends who are CEOs of companies, and they'll have somebody else handle their money. If you say to them, should you buy Coca-Cola or Gillette or something like that, they'll say, that's much too tough. I don't understand that sort of thing. What do I know about investing? And then some investment banker will walk in the next day with the idea they buy a $3 billion company, which is just buying a lot of shares of stock of one company. And they'll run through some little 2-hour presentation and turn it over to a strategic planning group and think that they are then the ones that should make that decision as to whether to buy multi-billion-dollar businesses when they really don't feel they're qualified to make $10,000 decisions with their own money. And it's extraordinary what you see in corporate America in the acquisition activity. It's a little like they say about making sausage and making laws. It's better unobserved. Charlie, yeah.
So my point with this little clip is that as the CEO of your own company or someone else's company, the role is to manage the assets and to build the assets to increase the value of the company. And even if you have a very small company, maybe it's just you, the same goes for you. The primary job of the owner or the CEO of a company is to make sure that the company makes money. And when you have profits, you need to figure out what to do with those profits. Because you would prefer it to be, you would prefer to have more money next year and not have it sitting in the bank account doing nothing. So let's look at how. What can companies do with profits to grow? So number one, cash in case of emergency. And I would say that this is the most important thing on this list, and they're in order. So if you're ever wondering in what order should I do things, this is the order. So number one, cash in case of emergency. If you run a small business and you have 5 clients, what if 3 disappear next month? What if COVID strikes next month? What if you get sick for a month? If you continuously take the money out of the company and then you have a bad month or a bad quarter, or you have to shut down everything for a year, will you survive? Will you be able to start up again? So always have cash in the business to survive whatever might happen. A fantastic example I've heard of this is the founder of IKEA. I'm from Sweden, by the way, hence the example. He wanted to have enough cash in the bank to survive for 2 years if they had to shut down every store, and he would still be able to pay all employees without firing anyone. Now, IKEA is a big company and they've made a lot of money over many, many decades, but that gives you just an idea of what big companies think about. If you're a car company, for instance, and you produce a crappy car, it might take you another year or a year and a half before you can produce something that's going to replace that. So you need to think about what to do in case things go against you. And cash is super important. When you have cash and you know that you have cash to survive no matter what happens, then you move on to expand. Expanding might mean that you hire someone so that you can get more done in the hours that you have. Increasing inventory, new sales staff, buying machines that produce the goods that you need. All of this comes second. After that, it means that you have the cash to survive. You have all the people in your staff that you need. There's not really anything else you can do with your money right now. Then you start looking at investing in another business. And that might mean that you have a competitor down the road that you merge with. It might mean that you invest in the competitor's business. It might mean that you buy shares in a company on the stock market. It might mean that you buy mutual funds or ETFs. It just means that you risk some money to grow that pile of money that you have, but you do not invest the cash that you have under number one. You do not risk the money that you need to survive. So survival is the most important. We're going to look into these 3 and number 6 today. Number 4, buy back shares. That's only if you have other investors in your business and one of them wants to leave or you want to buy them out. That could be very lucrative if you can buy it at the right price. Number 5, pay down debt. Number 6, pay dividend. What most people do when they have their own business and it is profitable is that they start with number 6. And according to my list, and I think I'm right in this case, that's the last thing you should do. Because what can you do when you pay yourself dividend? You're taking out money of the company that you might not actually need as a salary. and that means that you couldn't have invested them in your own business. That's the only reason for taking them out. So you've gone through all of the other steps and said, I don't need this money in my business. What you could instead have done was to hire a person or two or three, bought the new machines, upgraded stuff. I'm sure you can think of a million things to do with money in your business. How do you know what to pick? So safety first, then we expand, then we invest. And I think that it says or invest, but I think most companies could expand first. Longevity is the most important thing. So we shouldn't take out money from the business unless we're 100% certain that everything is fine and cash is going to just come in for the next couple of years without problem. When it's time to invest, you pick what is the most profitable, and I will give you the list of how to reason around what to invest in, but only after securing your financial future, only after saving enough money so that you know that the business will survive. Here, I want to emphasize it again, the business is its own thing. Even if you're the owner and employed in the business, you need to make sure that the business is okay. If the business dies, then you lose your employer. Where to invest? I'm sure you've all seen these labels or terms before. Bank account, which is super boring. You put your money in your bank, and in exchange, you get to pay a fee for the honor of having your money in the bank. You have interest-bearing accounts where you will make some money. You could invest in government bonds, and they are considered relatively safe or very safe. Corporate bonds will give you a slightly higher return. ETFs and index funds can contain hundreds or even thousands of companies. You can also have very narrow field index funds that only invest in tech or only have government bonds. Then you can pick your own stocks, and last on the list, your company. So when we look at the percentages here, those are rough numbers telling us about what kind of returns we can expect. A normal bank account, you actually lose money because we have inflation. So if you make 0%, next year grocery prices have gone up 10%, which means that you've actually lost money. Interest-bearing accounts usually fall a little bit short of inflation, but at least you're protected a little bit. Bonds, a little bit higher, corporate bonds, ETFs, etc. The last line, your company, that could be any number. If your turnover right now is £100,000 and you're making £2,000 in profit per year, what would happen if you take the money that you have accumulated and you decide to hire someone to sell your products for you? If we're lucky, we have a good product and we find the right person to sell our product, and that person works primarily on commissions, that means that you might have to pay that person half a salary for 1 month, and then the rest of the salary will come from the sales that person is making for your company. So you might have to invest, let's say, £2,000, £3,000-4,000 for someone to sell your products. And then every month after that, you will have more profits. And it won't actually cost you anything to have that salesperson employed. So when you invest in your own company, the return could possibly be infinite. Not infinite, but really, really high. It's different from company to company. So if we have an example, and this is just an example to have a dialogue, possibly a question or two. Should you save, invest, or pay yourself a salary? So here we have a company, instructional designer, £100,000 turnover, making £20,000 in profits, and on the balance sheet you have £40,000 in equity. So 60,000 would be borrowed money in this case. Do we have any ideas? What options do we have in this company? And there is no right or wrong answer, just to get us thinking a bit. Does anyone want to throw out an idea or a question? What would you do if this was your company?
So Joe's just put in the chat, thinking that this relates to a question that she's bobbed in earlier, which we're waiting for a moment to pause. Okay, so if we are a limited company, how do we keep profits and cash in the business, especially in lean times, in a tax efficient way? Because the more money you have in your bank account at year end, the higher, for instance, your corporation tax might be, and because you've made profit. So how can we do it in a tax efficient way, which is then leading us into this example on the screen?
Yeah, so it's really the more money you make, the more taxes you pay. So yes, it is boring to pay taxes, but at the same time, if you pay twice as much in taxes next year compared to this year, it also means that the company made twice as much money. So to keep it tax efficient, I would just assume that we could make sure that we stay on schedule with everything, the upkeep of the business. Like everything that we need should be paid for and done. But we should never be afraid of taxes. We shouldn't buy stuff that we actually don't need just so that we can spend that money. So I have a computer, let's say it's £2,000. Let's say that I have 10 people selling my products, and they all have computers for £2,000 each. And we're looking at a very good year. Should I just change everyone's computer to a new super deluxe model just to keep profits down? Well, not really, because then you're saving the tax or the tax bill. You're making that smaller, but that's just because you've made your profits way smaller. So don't be scared of taxes. And if you have tax planning issues, you should take that to your accountant and ask them for ideas. Yeah, that's my advice. Talk to your accountant. Some accountants will give you hints on what to do. Most accountants will say that I'm not allowed to give you advice, and then you need to talk to a financial advisor, which might cost £1,000, but it might be the best £1,000 you've ever spent.
Okay. So Joe's just done a follow-up with that. How can we save the cash? I mean, this might be going down the financial advisor route that you've just said. How can we save the cash without paying tax on it again and again? So let's say, for instance, that my company made £10,000 profit, and rather than taking it out as dividends, I thought I'm going to keep that in there for next year. I'm going to use that to, pay for this service or buy that equipment, whatever. And then I've still got, let's say, £5,000 out of that at the end of the next year. Essentially, I'm going to be paying tax on it twice. So it's more like, how can do you have any tips to make that process more efficient?
So you only pay tax on the profit in the year that you make the money. So if we make a lot of money in 2025, then we pay taxes on that money, and whatever is left is in your bank account. The next year, you're not paying taxes on that money again. It's just sitting there. So you're not paying taxes based on what's in your bank account. You're paying taxes based on how much did we or will we sell next year, minus all of the expenses. That amount you then pay your taxes on. So it has nothing to do with what is in your bank account. You only pay taxes once. And if you actually use that money the next year, when you've already paid taxes on them, and you use that to buy a machine or a computer, let's say, then you get to deduct that amount in your tax return, which actually decreases your taxes for next year by the amount that you've spent. Not the entire amount, because normally you take a computer and you divide that sum over 3 years, and then you get to pay that much less each year. So you're not paying taxes twice.
Okay, cool. That's answered the question for Joe. Thank you very much.
Any other questions there?
Not yet from the audience. I do have a few which we can get to later.
Okay. Let's see. So what type of company needs to hire? And this goes back to my little list here in the beginning. So we are now at number 2. How do we expand? And I think it's as simple as sales companies. If you're selling a product, you should at least think about what would it look like if I took my profits and paid someone to sell my product. Normally, for all profitable companies at least, the more people that are selling your product, the more money you will make. So any company that sells anything should look into how to sell that product. It could be to hire someone directly, it could be to outsource it, or it could be to hire someone who's good at marketing and helping you get clients that way. So it's basically every company that sells a product. I can't think of any other company right now that would not benefit from having someone who helps you with sales if you have the cash. What type of company needs to buy equipment? Also, number 2, machines and machines that then make the inventory, or computers, copying machines that produce whatever it is you're making. Any company that needs equipment to produce a product or service. So let's say that it's just you and you manage just fine with your computer to do everything. Then you hire someone to help you with sales. Then you should look into buying that person a computer, a mobile phone, maybe leasing a car, whatever that person needs. Yes.
What if that person is another freelancer? So for me, for Free Spirits, I'm collabing and bringing in help. I'm bringing in other freelancers because, that's the whole thing. I'm not employing somebody.
Yeah.
What if it is like that? I wouldn't buy them a computer. I'm sure that they would love that, but I'm not going to do that.
No. So they would then have their own phone, laptop, and car, or whatever they need to help you with that service. But then they also would charge you a bit more. It's almost always cheaper to hire someone yourself and supply them with everything they need. But then you're also taking on a little bit more of the risk, because you need to train that person and you need to make sure that everything's doing or going the way you want it to go. If you hire a freelancer, then you're hiring someone who's already proven that that person is a great salesperson. They know what they're doing. They have all the processes in order, but it's a little bit more expensive. Yeah. Just remember, there's a difference between what you need and what you want. Since we were talking about what to do with your profits, don't spend it just because you want new things. I've heard stories about people who decide to buy themselves a new car, a new company car, and they think it's fine to spend £50,000 on a car just as long as they put the company logo on the car, and that's somehow better than paying the taxes. Remember, if you have £50,000 in profits and you spend it on a car, you won't pay any taxes, maybe. But you could have just paid £10,000 in tax and had £40,000 left over to expand your business. and to give you more security in case the company had a bad month or a bad year. So there's a big difference between what the company needs and what the company wants, or often what the owner wants. Please interrupt if there's anything at any time. So I believe this is the last slide. So we've talked about number one, or what to do and in what order. Cash is the most important thing. Then you move on to expand. Then if we're lucky and we're expanding and everything is fine, we don't need the extra cash that we're producing, then you look into investing. And that's on the right side. That will give you an idea of what different options you have to invest in. The important thing that I want to mention here is that when you move down the list, you also move up in risk. So the more you're expected to make on those investments, the more risky it is. So if you take all of your profits and you invest it in a stock that you like the name of, you know nothing about the stock. It might go to zero. It might be the next Tesla. You don't know. So never invest money that you actually need. If you need it, you should count it as number one, cash in case of an emergency. You keep it in a bank account and you might get some interest in that bank account. And that's fine. At least you know that the money is there. Don't go investing in stuff just because it's fun to invest. And make sure you talk to a financial advisor if you want some more risk, or if you're interested in buying a competitor. Buy back shares and pay down debt. We haven't talked about them because they're almost never done. You need to be a very big company before talking about number 4 or number 5. Number 6 is when you think that you've gone through the list and everything is fine. The company is in order. You're growing and still making money. Then you could look at paying yourself a dividend. I think that's it. And that's a nice picture of me. Let's go back to this one.
Thank you so much. Okay, so what I'm going to do while everybody's thinking of any questions that you've got, bob them in chat or the Q&A. I'm just going to bob a few links into the chat for your webpage, your LinkedIn, and also if anybody wants to book a call with you. So I have some questions pre-prepared. You all know that I've got questions. Okay, so let's say that my company is still very early on. So maybe I've just started. Maybe I haven't even got to my first year of accounts yet. At what point do I start thinking about my profits and what I'm going to potentially do if I have no idea, like I don't even have projections yet or anything?
Hang on. Let's just, how do I stop share there? So what is the question exactly? When
should I start thinking about it?
Well, you should start thinking about having cash in case of emergency from day one. Of course, in the beginning, your main concern is to make money enough to pay your own rent and put food on the table. After that, you should just start to put money aside in the business and just keep it there. And I think it's different from company to company. But I would like to know that at least for 2 or 3 months, I'm okay even if I'm sick or even if I lose my 2 biggest clients. I would like to have security first, and then I could look into the other stuff.
Yeah. Thank you. When I first started my Go Ginger, so my freelance business, it was quite a while before I started actually taking any money out because I wanted to have, and I said this in the chat earlier, that I want to always have a float that is going to pay my subscriptions for the year. And then anything above that is the gravy. So my subscriptions, all of that is all done. Everything above is the gravy. So the float would change depending on what subscriptions I need, but it always made me get very itchy if I was reaching that level in my bank account.
Yeah.
So we just got a good question in from Andy in the chat regarding spending money on things you don't need that you want, like inflatable unicorns. That'd look great at the expo. He used to rent services from a business initially until he was paying more to use their services than to buy the equipment himself. Then he made the purchase and bought it in-house. During the rental period, he got free training on how to do the service or use the equipment properly. So I suppose that's a good tactic.
Yeah, that sounds like a real good idea.
Yeah.
Absolutely. I mean, if I can buy the thing outright and make more money that way, then sure. Then it's probably time to do it yourself or buy it yourself.
Yeah. But this is the thing, like if you can get free training or something with a trial period or with somebody to give you a helping hand until you're then financially in a position to then be like, I'm buying it outright. That makes complete sense, doesn't it?
Yeah, absolutely.
Okay. Next question that I have. What are some common financial mistakes that new freelancers or new businesses make? And I know that you're probably going to say it's number 6 and it's taking out your dividends and taking all the money out and then just whopping it.
Yeah. I think that first of all, you need to set up a separate account for your business so that every time you send an invoice, it's not meant to go into your account. It's supposed to go into the business's account. And then from that account, automate it so that a fixed percentage of whatever comes in goes into a tax account. Just to make sure that you have the tax money. And that's if you still want to manage all of the receipts yourself. I would probably say that you should have an accountant, even if you're just starting out. Talk to that accountant, ask them how they want to do it, and have a meeting with that accountant for 10 minutes every month. If you don't know how to read a balance sheet and income statement, ask them to explain it to you and make sure that you understand what's going on in your own business. It might cost you £1,000 per year. And when you're just starting out, that might be a very large number. But to try to sort everything out once it's gone wrong is going to cost a lot more. So get a good accountant, ask around who's good. And the most important thing there is that the accountant must be able to talk to you in a way that you understand. So explain the numbers so that someone who's not an accountant understands what's going on. And if the accountant also can be in charge of paying your salary, that's even better, so that you never have to worry about doing anything wrong.
I'm completely with you on getting an accountant. That was one of the first things that I did after I registered my email domain thing. It's like, need an accountant. Don't want to have the headache of trying to figure everything out myself. Just send it over. So like Andy's put in, having a separate tax account is a great idea. And also if you're registered for VAT, having an account for that cash as well. See, I've never done that. And Joel said, I think one of the UK bank accounts, can't remember the name, allows you to have buckets for putting cash in different, so moving it around within that same bank account. That's something definitely to look at.
Yeah.
But I've never done that. I've just always included that as part of my float.
Yeah.
And thought, well, based on that, I'm going to need X amount. So, but that it makes so much more sense to actually move it somewhere.
Sorry. Yeah, but then you still have to be in control of how much VAT should be in this bucket, how much tax should be in this bucket. And if you're ready to do that yourself, then I'm sure you can manage the rest of what the accountant should do for you as well. I prefer just to not do any of it. What I mentioned about wearing different hats, I know that I am not good at managing that part of my own finances. And if I'm paying my accountant £50 an hour, while I'm making more than £50 an hour doing my normal job, then wouldn't it make sense for me to do something where I make money than to take that hour and spend it on trying to figure out how this computer system works and where to put taxes and yeah,
Yeah.
it's not worth it unless you're really good at it.
Yeah.
Really.
Andy's just said that Monzo has pots which are like buckets.
Yeah,
So
good.
that's one of them. I mean, I've heard people say that every invoice that they get paid, they side 25%.
Yeah.
And they don't think about, oh, how much tax is that invoice going to have, and they don't try and work it out. It's just a flat 25%, put that somewhere else, don't touch it.
It's a really good idea, but then you're just thinking taxes, and most people that do that think that whatever is left is possibly my salary. And if they take that out, they might miss that once a year you're supposed to pay your accountant and you don't have the money for it, or your computer breaks and you need £2,000 today to buy a new computer, or your entire company just halts. So I would recommend setting aside quite a lot more. Again, it would be best to take this with an accountant, but I'm guessing closer to 40%, if not more. But that depends on what kind of business you run and how much extra cash you need on hand.
Yeah.
But yeah, just don't think that whatever is left after you've taken out the tax, that's your money, because there will be other expenses that you need to have money for.
That's it. And that nails on the head what Joe's just put in the chat as well. The big takeaway from this session: money after tax isn't take home, it's also for growing business.
Yes.
It's, because if you invest in your business, invest in growing, whether it's growing your client base, getting more leads, or, a different setup that's more cost effective for delivering online sessions or something like that, it's going to pay you back later on, isn't it?
Definitely.
Whereas if you take that money as a profit, as a dividend, as a salary, that's short-term gain rather than long-term gain, isn't
it? And I mean, you could use it to hire someone to do stuff for you, or freelance stuff, or just having someone who helps you set up a book a call with me button on your LinkedIn page. That might be a £50 investment, and you might get, a lot more money back. So sometimes even small things can make a huge difference.
Yeah.
So don't take everything out and spend it on fun stuff.
So another question that I've got, and it's kind of linking into one that Joe's just put in the chat as well, is we need to think about ourselves as well. So we've got pensions, we've got personal development, we've got courses, we've got conferences and expos, all of that kind of thing. So that, I suppose, needs to go in the float as well. So how can we use that money, not just reinvesting it in the business, but reinvesting it in ourselves? So we've got a pension, we're at the top of our game skill level.
Yeah. That's a question for a financial advisor. And once the financial advisor has given you sound advice, hopefully, you take it up with your accountant, who will automate everything. It could be as easy as talking to the financial advisor. He says that you should have this insurance or this pension plan, and then just setting it up. It's something that will take 2 hours to do in total, and it will change your future forever. So thinking about your own pension is super important. When it comes to investing in ourselves to do, what did you call it? Like fairs and
Yeah, so conferences, expos to do
Yeah.
courses, like the personal development that keeps us as freelancers ahead of the curve at the top of
Yeah.
our game.
So those are business expenses that are paid before taxes. So that often it's something that you need to do, because whatever your skill is, you constantly need to improve it. So if you're into marketing and you start buying every single new book that comes out on marketing, that should just be a given that you're allowed to do that. If you need to go on 2, 3 conferences per year and it's within your budget, you can afford it, yeah, do it. Not only is it something that's great for your own personal development, it's a great way to meet new clients and learn more about your business. So,
And I suppose you could even forward plan. So if your year end is April, as a lot of people's year ends will be, you can
mm,
have a look in February. Okay, so what conferences do I want to attend? What courses do I want in the following 12 months?
yeah.
And then that will then come out of that year's profit and reduce the amount of taxable profit for that end of year, I'm guessing.
I'm not certain how it works in England. Um, and in Sweden, you can decide uh, how you want to manage your bookkeeping. So I'm not going to say from which year you take the money, or where it counts, but definitely talk to your accountant. Your accountant will say that on average, you have, let's say, £2,000 profits per month. If you want to do these 3 things next year, you will be able to afford it. So just take it with your accountant, and that person will be able to tell you.
Okay, fab. Thank you.
Mm.
So Joe's just popping off. Thank you very much. But there was a point that she just put in the chat. From a business perspective, you still need to have the money in the business, 10 grand on pension or 10 grand on a sales or marketing person. If it's like weighing up. If you've got a
Oh,
certain amount of money
mhm.
profit in your business, how do you make that decision? What's going to be the best way to spend it?
Some business owners feel like this needs to be as big and as fast as I want it to be, or I could just as well do something else. Those people will just take any amount of money that comes in and immediately spend it. They might even take on investors to give them £100,000 just so that they can really market their product straight away. If it doesn't work, someone will lose a lot of money. And that's one way to run a business. If it works, everyone could be a millionaire in 2 years. But for most entrepreneurs who just have themselves, maybe 1 or 2 employees, then it's safety first. Make sure that you can pay all of the bills for the coming months in case something happens. Once that's done, whatever comes in, you can spend on growing the business. Especially if you have employees, because they trust you and they count on you for their income.
Yeah. Andy summed it up quite nicely. His answer would be, are you looking for growth or tick over? Where you
Mm.
just, coasting or looking to grow. Like for
Yeah.
me, I'm not looking to grow massively immediately, but it is
Mm.
like down the future. I need to set the foundations,
Yeah.
then look to grow, which I think for many new businesses,
Mm.
that's what you need to start doing. You need to look at, okay, how is the market doing? How is, what are the clients like? What are the fluctuations? So you can understand the business
Yeah.
before you think, in what area do I need to grow, or what does it make sense to use my profits on growing?
Mm. But also, if you grow slowly and you take all of your profits and then you hire another one, and you take more profits and you hire your second or third salesperson, and you continue to grow your business over many years, then you will probably see that that's a steady growth. And the plan is probably for you to build a big company and keep it because you want to run that company. Other people might take on lenders or investors, and they will try to build it as large as they possibly can in a couple of years and then sell it. But that's worth the risk if you take on an investor, because if it fails, it's not your money, it's someone else's money. So it depends on how much risk you're willing to take on.
Okay, lovely. Are there any more questions from the audience? I'm out of questions on my sheet. But this has been so enlightening for me, because I've been in business for, it's coming up to 8 years this year. And there are things that we've been talking about on here that I have never done. So I've never had a separate account to put my tax. I mean, I'm still using blooming spreadsheets. I haven't even gone properly digital yet with things, because I like things how I like them. And my profits, I'd usually just do dividends. I'd buy some new kit, or I'd book my hotel rooms or courses and things ahead of time to get it into a year's tax bracket. But I have never really thought, well, how could I use that profit to invest within the business? So it's definitely opened up my eyes.
And also when you know that you have the cash to survive for a couple of months, no matter what happens, then you've built the company so far that you can start talking to your accountant and just make decisions based on what last month looked like. So you will get the income statement from last month, and you will get a number. You made this much money. It's been added to your balance sheet. And that's also a lot more, how should I put it? It's a lot more, I mean, there's no stress when you look at what has happened, and you got it black on white paper that you made this much money last month. Instead of looking at your bank account, trying to figure out how much do I need of this money for next month? What is tax? Has this been paid? Hasn't it been paid? So try to build up that cash reserve, and everything is going to be a lot easier.
Okay. Well, we don't have any more questions from the audience, so I think that is your drop the mic moment. So
thank you
so much, Joakim, for all of your advice. And like I say, I'm definitely going to do things differently with my profits for Go Ginger and for Free Spirits. So thank you so much, and thank you all for joining us today. Feel free to drop off.
Thank you.
Thank you. Bye-bye.
Bye.